Welcome back to another episode. I'm your host, Ryan Richards, a residential loan officer and real estate investor based out of Massachusetts and Rhode Island. Today I have another solo episode coming to you with a topic that I think should get more attention, especially in today's day and age in New England, and that's home insurance. How does home insurance impact your approval from the lending perspective and as a buyer? And what should you look out for as a buyer when it comes to your insurance if you're underwriting investment properties or looking at your next single-family home? Especially in New England, there's a lot of things that come up that I've seen that can drastically impact the cost of your home insurance. So stay tuned to learn more about topics like this and much more. So when it comes to home insurance, nobody likes to pay it, but everyone has to have it. And there's a lot of things in New England because of the age of homes, the locations of homes and properties, multifamilies, that can drastically change the cost of your home insurance. And it can impact things, both, of course, on the deal underwriting side and as a homeowner. Your mortgage payment could end up being a lot higher because of the home insurance cost you didn't properly plan for. So I want to go over a few of the things that I've seen and I look at when I underwrite properties, when I look at estimating home insurance quotes, and things you can keep an eye out for when you tour your next property. So as part of your mortgage approval, lenders like myself will take their best estimate at a home insurance policy for the property that you're looking at to account for in the approval numbers and in their payment estimates. So for me, for example, it really depends upon the price point, the type of property, and what you're looking for that I'll take into consideration for my home insurance estimates. But there's a lot of variables. A few of the biggest variables that I see are, number one, the age of the home. Not necessarily literally the age, but the age of its components. How old is the roof? What's the condition of the roof? What's the state of the electrical? Is it old wiring? Do you have fuse panels? Do you have knob and tube present? Is the house in tough condition? Are there a lot of trees on the property? These types of things impact the cost of your insurance. So as a buyer, when you're walking a property, you want to make sure you look for those things. Look at the electric panels. Are those panels fuses? The old expression when they say you blow a fuse, that's literally because these fuses were screwed into electric panels and they actually pop when they trip. So you want to make sure you're looking at the electrical. Knob and tube can be very expensive. I purchased several properties with knob and tube, and my insurance cost goes up by over 100% in some cases. I've doubled the cost of my insurance because I had knob and tube present. So the good part is I got insured, right? You want to make sure you're protected. But I was fortunate enough to know when I underwrote this property for a period of time until I fixed the problem, my insurance was going to be exponentially more expensive. It was a 5-unit building I purchased in Massachusetts. I had knob and tube and fuse panels in the property. My insurance quote that I got was around what I estimated, which was like $8,000 a year. My insurance now is under $4,000 a year for that 5-unit building after I fixed the electrical challenges. But if you didn't know that, that's $400 a month that you didn't include in your underwriting that you're going to have to pay. So things you want to think about, things you want to look for. And in talking with your lender, it's really important to ask them if they don't already tell you, which they should. What are they estimating in for home insurance, and how can it change? For example, one thing that we see a lot of in Rhode Island is depending on your insurance carrier that you go through, a lot of the national insurance carriers view Rhode Island as a coastal community, which obviously has additional flood risks, storm risks that other places don't. So some carriers will quote extremely high cost because they maybe don't have the product, the program, or the right carriers for that type of risk. So markets like Rhode Island, you really want a local insurance broker to give you quotes and give you an idea of estimates even beforehand, because Rhode Island's more expensive in insurance than Massachusetts, at least in my experience. So where the property is can definitely impact the insurance cost. From the mortgage side, that insurance figure can drastically change what you're approved for. $200 a month in insurance versus $250, $260, that could be $10,000 different in what you qualify for because your insurance is $50 a month more. These are the types of things you want to think about. Thankfully, in my position, I get to see a lot of different insurance policies. So I've gotten pretty good at estimating what insurance is probably going to cost for a given building. So I want to give you a few of those metrics and ideas as you underwrite your next property. If you're underwriting a standard, let's say 3-family property that's built in Worcester, built in the 1900s and in decent condition, with none of these other electrical challenges, roofing concerns, or claim history on the property, which obviously is a wild card until you get a quote, you're probably looking at, the way I estimate it, is about $1,000 a year per unit. So if you're looking at a 3-unit building that's in decent shape, built fairly recently in the last 100 and 150 years, you're probably looking at a policy that's about $3,000 to $3,500 a year for that building. If you're looking at a 5-unit, similar condition without some of those extra challenges I talked about, same thing, probably $5,000 or so a year for that policy. Unless it's in great condition with some updates, you can probably knock it down like I did to closer to $750 per unit for the total policy. If you're looking at single family homes, I mean, that's again always a wild card. Rhode Island, and again, it varies on the price point as well based on the replacement cost of the property for the square footage to rebuild. That varies quite a bit. But I'd say in general, Massachusetts, I estimate about $125 a month, about $1,500 a year for the policy, assuming the home is averagely priced in its average size. In Rhode Island, that insurance, I actually estimate closer to $150 to $175 per month, so about $1,800 to $2,000 a year for that policy, just because Rhode Island has those extra characteristics about the state that insurance companies typically adjust for in the premiums. Being a coastal community, having a high risk for wind damage, storm damage, naturally raises the insurance premiums. I know I talk fast sometimes. That was definitely, went through that very quickly. But it's really important that you think about these things. As you're underwriting properties, as you're going through the approval process, ask these questions. Ask your lender, what is your home insurance estimate you're using? What is that based on, right? Why are you putting that number in there? Did you just pull it out of thin air, or do you have some rationale? And what types of things could change that number? And if they do change, how does that impact my approval, right? So be prepared for those things. Similarly, when you're underwriting properties, it's really important on these small deals. If you're buying a 3-family, 4-family, if your insurance goes from $4,000 to $8,000 or more, that sometimes might be 60%, 50%, 30% of your profit, right? It's not a lot of income on these properties, the smaller units. So that's a real cost you need to nail down because it eats into your margins and can change the deal structure later. And a lot of times there aren't contingencies on purchase and sales agreements that reference your insurance costs. You can add it in as a contingency, but most people don't. So you're kind of stuck with it. Someone will insure it, so you have to take it. Things you want to think about. Make sure you're asking questions. If you don't have an insurance contact, you want one up in this area, let me know. I've got great contacts I can connect you with, but these are the types of conversations and things you want to look for to make sure your next deal doesn't run into some major insurance challenges. Before I let you go, I have one other topic I wanted to mention. That's the concept of flood insurance. So flood insurance is required in areas that are typically of low elevation relative to the water tables in the area. The flood maps are set nationally by FEMA, which is the federal agency that's tasked with drawing up these maps. In Rhode Island, those maps recently just changed. And a lot of places that weren't previously in floodplains now are. And if you're in one of those areas, you have to get an additional flood insurance policy outside of your traditional home insurance policy to cover for that flood risk, which in some areas can be very significant. For example, some of the properties we look at down the Cape, Cape Cod up in Massachusetts, if they're on the water, those flood insurance policies can be $10,000, $15,000, $20,000 a year, depending on where your property is, how close it is to the water, where the high tide line is. It can get very significant. So you really want to make sure you're looking at the FEMA flood maps, or you ask your realtor to check, or your lender. They'll have access to the platform and know how to use it to check, make sure you're not in a flood zone, because if you are, you need that policy and you need to know how much it's going to be to factor in, one, potentially for your loan approval, or two, for your deal underwriting if you're an investor. And then over the long term, that sometimes affects resale. I know many of my buyers who say, I don't want to buy that property because the flood insurance is crazy. It's $5,000 a year for flood insurance. I don't want the property. And usually the flood insurance is there for a reason. Like, there's a risk of flood. So that's a concern for people too. But important to make sure you're checking those types of things as you're walking properties, looking at deals, or looking at your next primary residence. You want to make sure you check for flood insurance because it can make or break how affordable your payment is or whether or not the deal cash flows in a lot of cases. So if you ever have questions about buying properties, investing in real estate, mortgage financing, insurance, whatever it comes down to, real estate related business, I'm always happy to chat. Hopefully, see you on the next one. If you're interested in learning more about the show, learning more about me, or coming on the show, reach out to me and we'll connect. See you on the next one.